Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. We'll start off the show with the markets, and the sentiments here in Africa looked negative at intraday. The Nigerian Stock Exchange was unchanged at midday, but the Jersey Index in South Africa was down, heavily hit down by 1.16%. In Egypt, the EGX 30 index fell 0.70% at intraday. Meanwhile, the Nairobi Stock Index closed its trading day negative on Wednesday. It was also negative at intraday in the Middle East as all the markets we track here tilted southwards. Saudi Arabia snapped a four-day winning streak with the benchmark index down 0.06%. Qatar's index decreased 0.67%, led by a 1.7% fall in Qatar International Islamic Bank and a 0.7% drop in Industries Qatar. In the UAE, Dubai's main index slid 0.72%, with blue-chip developer Emma Properties shedding 1.5%, while Emirates NBD Bank dropped 1.2%. In Abu Dhabi, the index declined 1%, hurt by financial stocks, with market heavyweight First Abu Dhabi Bank easing 0.8%. And in Europe, stocks traded lower in the morning as relations between China and the U.S. come under strain over Hong Kong amid concerns that phase one of a trade deal between the two powerhouses may be pushed into 2020. Well, it's also a busy day for economic outlooks. Conrad will talk to us about all of these. Hello, Conrad. Good afternoon.
Good afternoon, Chimmy. Thanks for having me back on Channels TV.
You're welcome. Well, in the U.S., the protocol of the last Federal Reserve meeting was published, and today the OECD comes out with its economic outlook. Meanwhile, everyone on the markets keeps speculating if or if not the U.S. and China will manage a trade deal this year. What's the impact of all of these on the market trend in Europe?
Well, our German index, for example, the German DAX is up, Jimmy, but not very decidedly so. And you mentioned most of the reasons behind this. The protocol, the minutes of the last Federal Reserve meeting made it pretty clear that the markets cannot expect another rate cut in the United States anytime soon, and that also the last rate cut was not something that the monetary policymakers in the United States agreed on easily. So not a given, this generous monetary policy in the US. Also, the OECD forecast contains not much to be optimistic about. World GDP growth is expected to be 2.9% this year, and the OECD says that global growth in the next 2 years, 2020 and 2021, should remain at a maximum of 3%. That's the lowest growth rates since the financial crisis. Also, the conditions that the OECD quotes for this to change, let me quote them. The organization says governments must work together worldwide urgently to boost investment and establish fair international rules on taxation and trade, unquote. And that's, of course, not something that we can really hope for in the near future with all, the difficulties that international governments have to find common ground in those questions.
Yeah, trade continues to rock the market. Anyway, let's look at some corporate news out there. In a surprise move, Deutsche Telekom, that's Germany's largest telecom operator, has turned against Huawei, the Chinese networks technology provider. All Huawei's components are going to be banned from Deutsche Telekom's core networks. What's behind that?
Well, Jimmy, behind that is the concern of Deutsche Telekom that you get in trouble with countries or legislations that have something and that even ban Huawei, namely, of course, the United States. Up until now, the German government had tried to make sure that the implementation of the 5G technology here in Germany follows a certain procedure, that security standards should be checked to make sure, that the influence of companies like Huawei that have strong ties with the government and the military in Beijing does not become too big. Deutsche Telekom, up until now, fiercely opposed a blockage of Huawei, saying that this provider of technology was desperately needed for a swift and cheap implementation of 5G. But the reports are now that Deutsche Telekom has changed its mind, that at the top level of Deutsche Telekom, the managers are now more reluctant to implement Huawei technology, at least in the core networks for 5G. Of course, now that raises a lot of questions among investors about how quickly the technology of 5G will be implemented here in Germany and at what cost.
All right, still talking corporate news. German steelmaker ThyssenKrupp has scrapped the dividend for shareholders and reported even higher losses than analysts had anticipated. Any silver lining on the horizon for this iconic German industrial giant?
Well, to me, if there's any silver lining, it's in the very distant future. The strategy that ThyssenKrupp now has come out with is something that many analysts approve of. The company is supposed to become less of a conglomerate. It's going to become easier structured and easier to understand for investors. But the short-term outlook is very insecure. The share price today of ThyssenKrupp down 10%. Those heavier losses that were reported today came as a very negative surprise. Also, the company is talking now about potentially even more job cuts to expect. Up until now, 6,000 job cuts were in the planning, but the company now says it could be worse, and that gives not really an encouraging picture. It sounds rather vague. It sounds like the top management at ThyssenKrupp also finds it difficult to tell what's going to happen in the near future. A silver lining maybe is the planned spin-off of the elevator unit, the electric lift unit of ThyssenKrupp. There are reports that the Finnish competitor Kone has offered a breakup fee of several billion euros, just more or less for the privilege to become the preferred bidder for that unit of ThyssenKrupp. This could be the desperately needed source of cash for the German industrial group.
I wish them luck. Anyway, thank you for those updates, Conrad, and enjoy the rest of the day.